Most people think you need millions of dollars in the bank to retire, but I'm going to show you how I plan to retire by age 39 with almost no money in the bank, step by step. The strategy I'm sharing with you today is not encouraging you to be homeless, take your life savings and go to Vegas. In fact, quite the opposite. I think that it can be done on average in about 20 years, depending on how aggressive you want to be, but it will take time, diligence, and patience. Step 1 is to create a scalable income. In order for this plan to work, you will need an income. Now, I didn't say that you need a job that requires an MBA. I didn't go to college and I have no fancy degrees. But you do need to find a job that you will get paid for your skills and one that can scale. Here are some examples. A job plus a side hustle, freelance work, sales or commission-based, or maybe even starting a business. If I was going to be trading my hours for dollars, what was more important to me is that I was gaining skills and being in an environment that forced me to grow. Sales is a great way to start. I actually started in sales. Contrary to popular belief, you don't need to be really good with people, but you do need to understand what people want. You do need to build a great work ethic, and work ethic is actually the main point of this first step. You need to grow an all-in mentality, one that focuses on growing your skills and expanding your knowledge. Step number 2 is learn to manage an income and live frugally. One of the biggest temptations we have, especially when we start making a decent income, is lifestyle inflation. In simple terms, not letting our actual income dictate our lifestyle. Regardless of how much you make, don't allow yourself to spend on things that you really don't need. Instead, be disciplined to stack your money and set it aside for investments. That will pay you tenfold in the future. One of the biggest indicators of a potentially successful person is their ability to commit to delayed gratification. We live in an instant gratification society. We expect everything faster and faster, and this concept isn't necessarily our fault. Everything is marketed to us and catered for us. But this has created a society that is recklessly fueled by consumerism. Taking the time to audit your finances and create a budget where you dictate where your dollars will go will help you become financially free and is crucial to becoming a great investor. In order to be a great investor, it is nearly impossible to run your investments like your personal finances if you already have a hard time just managing a paycheck. People always think that more money will just solve their problems. But if you can't manage a $2,500 a month paycheck, you probably can't manage cash flowing investments. When you have a sizable gross income coming in, or the income before the expenses are paid, knowing how to strategically use those dollars is crucial to running a great investment and a profitable one. There will be endless things that are advertised to you and sent to you, so knowing where to spend that money to maximize profitability and scalability is a necessity. Managing investments well is really no different than managing your personal finances well. There are income and expenses. Learning how to trim the fat and making sure that there's profit left over at the end of the month, end of the quarter, and end of the year is crucial to making this plan work. And that leads to step 3, investing in cash flowing real estate. There are many ways to make money in real estate, and one isn't necessarily better than the other. But one reason that I love real estate is there a limited amount of it on this planet. Unless we go to Mars or something, then that just opens up a new market. There are fix and flips, novations, development, vacation rentals, buy and hold, the BRRRR method. There are a million and one ways to make money in this industry. The route that I've chosen to go is buying undervalued assets with long-term financing, buy and hold, and either refinance out my equity, debt-free, or use a 1031 exchange to level up. The important takeaway in this step is to learn the game. Basically, learn how to play Monopoly in real life. Investing in real estate is not something you wake up one day and just start doing the next. If you want to invest in stock or cryptocurrency, you can actually do that. You can open a brokerage account, deposit some money, and you're ready to go. That can literally be done in 24 to 48 hours. But investing in real estate is different. It takes time, patience, and knowledge, and you have to be committed to the long game. One problem that I've seen through the years is people look at flippers and doing novations. You can make $20, $30, maybe even $100,000 in less than 6 months. But at the end of it, you don't own any property. It's the same business model as buying something on Facebook Marketplace, refurbishing it, and reselling it for a higher price. This method is great for turning over your money fast. There's nothing wrong with it. In fact, I've done it myself. But it's hard to create a passive lifestyle using flips. My time horizons for investments are anywhere from 5 to 7 years, even 10 years plus. I don't really plan on making any real money on my equity for at least 5 to 10 years. But during that time, I can extract income during my holding periods. There's been a sentiment online that rentals are dead, but from my purview, that is just not true. Especially if you learn step number 4, scale by leveraging OPM and OPS. OPM just stands for other people's money. Every real estate deal is done in cash. Some of it is the bank's, some of it is yours, some of it is investors. But at the end of the day, all transactions are done in dollars and cents. If you ever invested yourself, you'll find really quick that because it costs so much to get into, you can only do maybe 1 to 2 deals a year by yourself. This is where OPM comes in. Now you may ask, if person X makes so much money, why don't they just invest themselves? There are many individuals that earn a lot of money because they're good at their job. And instead of being a full-time real estate investor, they just want to keep doing whatever it is they do. And that's where you potentially come in. At this point, you're already investing in deals, and you got really good at the last point, learning to play Monopoly in real life. But the only way for you to scale and hedge your risk is to get into bigger assets. And the only way to really get into bigger assets is to learn to use OPM. Now, there's a lot of responsibility that comes with this. And there are many regulations set by the SEC that are specific about who you can take money from and the type of assets you can buy. This is also something you don't just think of one day and implement the next, even if you're a seasoned investor. I'm not going to get into all the details now, but I will make a future video that breaks down this business model. In a nutshell, people are paying for your time and your expertise to put their money to work instead of just throwing it in a 401k. So now you're being compensated as an industry expert. People want to invest alongside you for your access to deals and your knowledge. There are a lot of ways to bring your investors value, and that could potentially outpace traditional investment methods. I won't get into all the details today, but I do plan on making a future video about monetization methods for buy and hold real estate. Managing investments and finding good deals is a full-time job. There is a lot more capital out there that needs a home than good deals to place them into. So now that you got deals rolling and capital coming in, it's a lot to manage. This is where the second part comes in, OPS, or other people's skills. You can't realistically be a one-man show, managing investors, banks, brokers, and looking for deals all at the same time. You will need a strategic team. If you partner with individuals that balance your weaknesses and that you can trust, then you can scale your portfolio. Most of these partnerships can last 5 years to even over a decade. So I will say you need to be really picky choosy about who you do business with. One of the best parts about investing in commercial real estate is that a third-party management company is built into the expenses. So it's not your job to answer the phone at 5 a.m. when a pipe breaks. You have a team of professionals on hand to handle that. You are in the landlord business, but you're more in the business of acquisitions and dispositions. Using good management companies is all part of the OPS, and having a trusted management partner can make or break a piece of real estate. So now that you've scaled, and now you're making maybe tens, even hundreds of thousands of dollars a month, how do we protect it? Reduce taxes and utilize the 1031 exchange. One of the biggest potential hits to your bottom line is taxes. I understand that taxes are in some ways good, and there are certain government programs that need it, and it helps the citizens overall. But there are strategic ways to mitigate your tax liability using real estate. I won't get into all of them in this video, and I always recommend using a CPA for any specific questions about tax. But here are a few that will introduce the benefits to you. Number 1 is depreciation. The IRS lets you write off the structure, 27.5 years for residential and 39 years for commercial property. The basic concept of this is that land typically appreciates over time, but the building itself will depreciate through wear and tear. Number 2 is bonus depreciation and cost segregation. Advanced investors will use cost segregation studies to accelerate depreciation. This allows them to deduct more in the early years of ownership and significantly reduce taxable income. And number 3 is operating expenses. Mortgage interest, property management fees, repairs, maintenance, property taxes, insurance, and even business-related travel can be written off, furthering reducing taxable income. Now the big one, and my personal favorite, the 1031 exchange. Here's a quick overview of how it works. Step 1, you sell a property. The funds go to a qualified intermediary, not directly to you. Step 2, identify a replacement property within 45 days. Step 3, close on the new property within 180 days or approximately 6 months. Step 4, reinvest the full amount to avoid capital gains tax. I'll do a full video breakdown on the 1031 exchange on how much you can potentially save per transaction and over a lifetime. In a nutshell, it allows investors to keep trading up and avoid paying capital gains tax along the way. This is one way that investors create massive portfolios over decades. Now that we are investing, scaling, and using legal tax benefits, we can now enter step 6. Cash flow is greater than expenses, financial freedom. Coming from a family of investors, I was never taught about 401ks or retirement accounts. The idea of saving money and withdrawing from it till I die scared me, and it still scares me to this day. If your capital is strategically deployed in cash flowing assets over time, you could potentially retire with more income every single year. This increase will come from raising rents and inflation. You can also potentially die with a higher net worth than when you retired because of the same factors. I do believe this plan can be accomplished within 2 decades, depending on the lifestyle that you want and the amount of cash flow you need coming in. So you don't need millions in the bank because your money is deployed in cash flowing assets, working for you into your retirement. Now, it's not that you won't have to work at all, but taxes and accounting can be handed off to a bookkeeper or accountant. Daily management of the properties can be managed by a third-party company. You just need to be there to make crucial decisions of when to buy, when to sell, when to make repairs, when to make improvements, but you don't have to do this every day. You get to choose when to work, not work because you have to. For me personally, I also see a lot of benefit in overseeing my portfolio. Into old age, it will keep my brain sharp and engage in high-level thinking. Our brain is a muscle, and working it out into old age can help keep our mental acuity up. Thank you so much if you made it to the end. Please like and subscribe and share this with all your friends, and I hope to see you on the next one. And remember, the easiest way to predict your future is to create it.